Today, we're going to break down the playbook that literally stands between a successful sale and total chaos. This is the invisible process that makes sure every business actually gets paid and gets paid correctly every single time.
So what actually happens when a sale goes wrong? I mean, really think about it. You ship a $1,000 item to the wrong address, or maybe a huge customer just never pays their bill. This isn't just a minor headache, right? These are the kinds of mistakes that can absolutely cripple a business.
So, the solution? Well, it isn't just crossing your fingers and hoping for the best. It's a really meticulously designed system. I like to think of it like a set of guardrails on a super winding mountain road, you know? It's there to guide every single transaction safely from the moment the order is placed all the way to cash in the bank.
So let's do this. Let's follow the money. We're going to trace one single sale through this entire 10-step journey. From the second that customer clicks buy all the way to the final deposit, we're going to see exactly how these critical guardrails actually work in practice.
Okay, but first things first. To really get this playbook, you need to meet the key players. There are 4 essential roles in this story, and the number 1, absolute golden rule is this: they must always be kept separate. Seriously, this is the secret sauce that makes the whole system work.
And this core principle has a name. It's called segregation of duties, and it is the absolute bedrock of financial control. It's designed to prevent everything from simple, accidental errors to outright fraud. The idea is really simple, but it's incredibly powerful. No single person should ever have control over a transaction from beginning to end.
All right, enough theory. Let's put this into action. Our story begins right where you'd expect, the exact moment a customer decides, yep, I want to buy that.
Okay, step 1. A sales rep gets the customer's order. They're the initiator. Their whole job is just to get the process started. But look closely at their role here. It says no control, and that is so crucial. It means they can't approve credit, they can't change prices, they can't ship goods. Their one and only job is to get that order in the door. That's it. And right here, our first guardrail just slams into place. The order goes to a totally independent credit manager. This person is our first authorizer. Their job? To evaluate if the customer can actually pay and then approve the credit terms. And this is a purely financial decision. You know, it's got nothing to do with the sales team's desire to hit their commission goal. And this really illustrates the why behind all this, doesn't it? I mean, just think for a second. What could possibly go wrong if the same person who's chasing a sales commission could also approve the credit for that sale?
Yeah, it creates a massive conflict of interest.
Okay, so once the credit's approved, the order moves on to a sales order clerk. This person is our recorder. They formally enter that approved sale into the company system, and boom, we have an official record. Now, this is a super critical data entry step, but notice what they're doing. They're just recording what someone else already authorized.
Next up, the system shoots a message over to inventory control. This is our second authorizer in this process. Their job is to confirm, yes, we actually have this in stock, and then they authorize its release from the warehouse. So they approve the movement of the asset, but, and this is key, they never physically touch it. See? Another one of those critical separations.
Okay, let's shift gears and move to the next phase. Let's see how the actual physical product gets handled. Because now this is where custody of the asset, who's actually holding it, becomes the main focus.
And now we meet our very first custodians, the warehouse staff. They get the authorized order, and they're the ones who physically go pick and pack the goods, so they have control over the physical thing, the actual asset. And that is exactly why they're completely walled off from creating or changing any of the sales records.
From there, the shipping department takes custody. They're our second custodian. They get the shipping documents ready and send that package on its way. Now, this is a really big deal because often this is the exact legal moment a sale is considered complete and the company can finally officially record the revenue. All right, the product has officially left the building. So now it's all about making sure the business gets paid and the books are absolutely perfect. The focus shifts away from the physical stuff and right back to the financial records.
So now, a totally independent billing clerk, another recorder, steps in to generate the customer's invoice. And this isn't just about typing up a bill. No. They perform a critical check. They match the invoice to the original sales order and to the shipping documents. This is how you make sure the customer gets billed for exactly what they ordered and exactly what you shipped. Nothing more, nothing less.
So here's the bottom line on that.
The people who handle the physical goods, or the cash for that matter, can never be the same people who create the bills. Why? Well, this prevents someone from, shipping a bunch of stuff to their friend and conveniently forgetting to generate an invoice for it.
Finally, we get to the accounts receivable accountant. This is our last recorder. They take that verified invoice and they post it to the general ledger. And this is the moment that sale officially becomes part of the company's financial statements. It's what creates the revenue and the account receivable on the books.
And then comes the best part. The payment arrived. A cashier or someone from the Treasury Department takes over. They are a custodian, but this time of cash. Their job is beautifully simple. Deposit the money. That's it. They can't change invoices, they can't alter sales records, they can't write off a debt. They just handle the cash.
Okay, we're almost there. And now for the final, absolutely crucial step, the safety net. This is where a fresh pair of eyes comes in to make sure every single part of this process worked perfectly and that all the numbers actually tie out.
And this brings us to our fourth and final key player, the reconciler. This person, usually a general ledger accountant, has been completely separate from this whole process up until now. They step in at the end to independently verify that everything, and I mean everything, matches up. The original order, the shipping docs, the invoice, the final cash deposit. They are the ultimate check and balance in the system.
So let's just step back and look at the whole safety net laid out here. You can really see the pattern, can't you? You've got your authorizers, like the credit manager. Then you've got your recorders, like the different clerks. And then look at the custodians, the warehouse staff handling the goods, the cashier handling the money. The key takeaway? The people who physically control the assets are totally separate from the people who record the numbers. That is the entire system, in all its elegant glory.
But what if you're listening to this and thinking, my business is tiny. I don't have enough people to fill all these different roles. And you know what? That's a super common problem.
Well, in that case, active, and I mean documented, review by the owner or a manager becomes your most critical guardrail. It's everything. They have to become the final check, the ultimate reconciler. So the real question this leaves us all with is this. As your business runs, or as it grows, where are your guardrails?